Good afternoon, everyone, and welcome to this week's episode of my YouTube channel. My name is Jake Fryman with Co-Owned Scheme Partners here in Dayton, Ohio. This week on my channel, I wanted to talk a little bit about taxes and real estate. So this is your reminder, if you haven't paid your taxes yet, be sure you do that. You have till April 15th. I'm actually paying mine later today, which is kind of what inspired me to talk about that this week on my channel. So when it comes to real estate and taxes, I'll start off by saying that I am not a tax professional. I'm not an accountant. I'm not a tax attorney. I'm not involved in taxes. So if you have any questions about real estate and taxes, you should talk to a professional in the industry, whether that's your accountant, an attorney, someone who's more aligned with taxes can give you better advice. That's not the purpose of this week's episode. Just to kind of remind you though that taxes are involved with real estate. If you've had your property longer than 2 years, you can avoid capital gains taxes because that is the rule. If you've owned your home for less than 2 years and then you sell it, you may owe a tax on that any profit that you might make on the sale of the property. If you've had it for longer than 2 years, you can't avoid those taxes. The tax code has changed a lot recently. There's been a lot of new laws passed about taxes, both at the state and federal level. There's been a lot of changes to the way things are taxed and the way you are assessed for taxes, especially with inheriting things, income, things like that. But it's something to think about though when it comes to taxes. Like if you inherit a house from, say, a relative, if you're given a property or you have a secondary house, if you have rentals, if you receive income from those rentals, all those items can be taxed. All those items you have to report. So it's important when you're having your taxes done, if you're talking to an attorney, if you're talking to an accountant, it's important to talk to them about any relevant real estate that you have, any transactions that you have had, and ask them if it is taxable or not. Ask them if you owe any taxes, and be sure to have all your records. Have all your records of rental income, of expenditures. If you've inherited a house, be sure to have all the relevant paperwork of inheriting the house. If you've been gifted a house, gifted a down payment as part of buying a house, anything like that. Any properties that you own, any income you've generated from those properties, or any properties that you have received as a gift or for some sort of financial assistance, it's important to at least talk about that with your accountant, your tax preparer, whoever you're working with, and be sure that you're on the up and up when it comes to taxes and that you're reporting everything. And in some cases you may owe, but hey, in some cases you may even receive a credit. Like for instance, you can, for all the interest that you pay on your mortgage, you can report that on your taxes and receive a deduction for the mortgage interest that you paid. There used to be a credit for being a first-time home buyer. That went away, but you can still claim your mortgage payment interest, and that can help you reduce what you owe on your taxes. So it's important to consider everything that you have going on with real estate because those items are taxable. Usually you can avoid paying taxes on selling your own personal home, your primary residence, if you've had it for longer than 2 years, but there's a lot that goes into that as well. I mean, as I said, I'm not the tax professional here, but that's something that you would want to follow up with your tax professional, whoever you go to for those sorts of things. Ask them for more specifics on that, but there are certain benefits to owning real estate that can help you with saving taxes come tax season. So keep that in mind. Happy filing. Hope it goes well for you. And I'll see you next week. Thank you.